Hello everyone and welcome to today's morning report on Thursday the 10th of August with me, Richard Perry, market analyst at Hantec Markets. We've still got a fairly cautious move or mood sentiment that we have in the markets as the sort of tensions surrounding the geopolitical sort of biting it continues really over US and North Korea. No real sort of de-escalation of the tensions yet, and the sort of market remains pretty cautious on the back of that. What we have seen though is a dollar rally, and the dollar rally is starting to come through against pretty much everything. In terms of the forex majors, other than the yen. The yen remains pretty solidly strong, and does gold. Those are two key safe haven plays, and subsequently they're still strong. What we saw is Treasury yields falling away yesterday, and that fall away has sort of stabilised to a certain extent, as you can see on the 2-year and the 10-year. But there is still that factor there that there is a marginal sort of move towards safe haven trades, but the impetus of that safe haven flow seems to be sort of dissipating slightly. Now, what we have seen is risk sort of volatility increasing. You can see here on the VIX, sharp moves higher on the VIX in the last few days. Now, there was an intraday sort of move towards the low of the day, which interestingly saw the S&P 500 closing almost flat on the day. You can see there, 2,460 on the S&P, key level. As a little bit of a top pattern potentially there. But what we have seen is that volatility is just picking up again, and as the equity markets in the European session remain under a bit of pressure. So the DAX is lower again, the CAC, and also the FTSE. FTSE is being hit by sort of a whole sort of number of ex-divs as well, cutting a load of points off the index. But certainly equities are still under a little bit of pressure, it would seem, in the European session, as you can see here. FTSE down sort of 55 ticks. DAX down 40 ticks. Now, in terms of what we've got to hit the markets today, well, we're looking at a little bit of inflation data for the States. The factory gate inflation is the main focus, but in front of that we've had the UK manufacturing and industrial production numbers. And they came in fairly well, fairly positively on the industrial output, but there was also a concerning move on the construction output as well. So that move has slightly tempered an initial gain on sterling today, but the main focus, as I said, is going to come on the US PPI, the factory gate inflation, which is at 130 today, expected to tick mildly higher on both core and the headline, to 2.1 on the core and the headline to 2.2%. So that will be interesting. Will that help to sort of stabilise the dollar today? So, which seems to already be coming through. Now, in terms of my chart of the day, I'm looking at the Aussie dollar. Now, the Aussie dollar has been corrective as the last sort of week or so. We've seen this sort of continuation of negative candles. We've seen sort of lower highs, lower lows, falling away. Momentum indicators increasingly corrective, with the MACD lines crossing lower. RSI below 60. Now 50 is a key level on the RSI, as you can see here on this chart. 50 and 52 and 54 were the June and July lows. So a move below 50 would certainly suggest the market is turning increasingly corrective, but you can see here a bit of a top pattern, isn't there, which comes in around 78.75, and we can see that support is being tested at the moment. It got broken on an intraday basis yesterday, but closed back above it. So the market is giving it another go today. And it looks as though this level is going to be broken. You can see here on the hourly chart the succession of lower highs and lower lows, with the rallies being sold into, the momentum indicators all negatively configured, RSI failing at 60, going below 30, MACD lines failing at neutral, and it looks as though rallies are being now sold into. And you can see here on the hourly chart that 79 figure seems to be a bit of a pivot near term. 79.10 was yesterday's high, but 79 figure seems to be a pivot. So 79 figure to 79.40, a nice little sell zone that we've got here on the Aussie now, and it would only really be a move above 79.80, which was that reaction high earlier on in the week. last Friday, that would really sort of start to turn this one around. But there is a downtrend progressing, and a close below 78.75 would open the downside. 78.35 and 77.50. These are old key breakout levels that the market would be seeing as supportive, so they would be tested, but certainly a breakdown of that top gives you, I think, 190 ticks of downside, so there would be the prospect of a continued correction, yeah, that would be coming through if you saw a close below 78.75. So with that in mind, I wish you good luck in your trading today, and I'll speak to you later. Thank you.